right? Utilities, rent. What other outflows? Cash outflows.
Investing, maybe?
Very nice. Purchase of assets, long-term assets. Long-term assets, furnitures, computers, vehicles, right? Or maybe jets.
Did we say future investments, maybe?
Future investment. What kind of future investments?
Like, let's say we're a company that bought many Bitcoins now so that we can use them in the future.
That can also be yes.
What's the second one? You said purchase of.
So
What did you say in the first?
any activity for the business activity in which cash is going out from the business, we call this cash outflows. So we are, writing down some possibilities in which cash can actually go out from the business through expenses, purchase of long-term assets, purchase of long-term investments like stock, right? You purchase other companies' stocks, right? Or your own stocks, treasury stocks, right? If the company purchases its own stock, even then cash is going out from the business. Purchase of stocks, every kind of stock, its own or other companies, or purchase of Bitcoin for investments, right?
And also dividends?
Well done. Dividend and interest. And interest paid, not interest received. Right? So all kind of expenses, including the cost of goods sold, salaries, utilities, rent, salaries, and its commission to the, marketing department, whatsoever. The other category is purchase of long-term assets. For example, you are purchasing plants, machinery, building, right? This kind of stuff. And then purchase of stocks as well. Any kind of stock, whether your own stock. When you purchase your own stock, we have a specific name. We call this treasury stock. And other companies' stock for investment, and also for example, Bitcoin as well for investments. Dividend and interest paid. Right? So cash budgets basically give you information. If you are making cash budgets for 3 months, then cash budget for 3 months will show you that what are your 3 months activities regarding inflow, or how many amount of money you would be receiving in 3 months as inflow, and what will be your cash outflows. What it tells you. Cash budget mentions inflows and outflows, but why we need that? So that we can plan better whether we have cash or not. We will see that whether in 3 months our inflow are greater than our outflow, or our outflows are greater than our inflows. Then we can arrange from our banks that, okay, in our, at the end of 3 months, we would be needing $40 million. $40 million. Please bank arrange for us, because our planning shows that in 3 months, our inflow is going to be small, our outflow is going to be great. And in other months, we would be having, for example, 70 million surplus, which means our inflow is greater than outflows, right? And business must pay salaries on every first, or first to fifth, at the start of first to fifth day of our, to the employees, right? So they also need to plan this one. Maybe their cash is already stuck, or they right now facing liquidity crunch, which means they have the things, but right now they cannot convert it to cash. It takes time. but salaries and other expenses must be paid according to the contract. So that's why the cash budgets will tell you that whether we need cash or whether we have extra cash. If we have extra cash, then we deposit with the bank and receive interest. And if we don't have that cash, we request to the banks and receive the cash and pay interest later, right? So this is the whole story of this cash budget. So let's talk about this. So we start cash budgeting from the cash budget, start with beginning balance, right? And then we add receipts less payments, or add cash inflows less cash outflows. And then we find out the cash available before new financing, whether we have that cash or not. Or for example, we were planning that in our third month, we would be having 70 million. And in 70 million cash, we can purchase a new plant. If we don't have that 70 million, then we ask from the bank. This cash budget can also be used with this one for new financing investment as well. And then you compare the available cash to the budgeted, cash balance. So this is the whole crux of cash budgets. So let's talk about, and when we do some examples, it will further clarify your ambiguity. Here we go. So what are the steps? First of all, start opening balance.
To the previous slide.
Yeah, sure. See here?
Yeah. What do you have for inflows? Inflows 5, the fifth step. I can't read that.
Inflows 5. Issuance of stock.
Relations of stock. Okay.
Okay. Okay, what are the steps to create cash budget? Number 1, you start from opening balance of cash balance. And where you can find out this one? Through balance sheet. So this is the cash budget at the end of 31st December 2014. So you take cash balance from the balance sheet of this company, Mid-Atlantic Manufacturing Company. So this is the beginning balance. So they have balance 6260 million, right? Okay, the question is silent, so it's 1,000. Okay. And now the budget, which means they would be receiving collection from the customers. And that include both maybe the sales are okay. Right now I don't want to talk, this would be more complicated. Okay, just here. So collection from customers, right? So this figure include both cash sales plus payment from customers. It means they would receiving $55,990 as a receipt from customers. It means this would be against cash receipts against sales, right? Customer, you sell the goods and customer he gave you the money, but that doesn't mean that this is 100% sales. If question says you how much are the sales, so this is not the sales figure. This is the collection from customer. Sale can be more, right? Because if you sell $100,000 sales to the customer only pay you $55,990. That doesn't mean that this is the sales figure. No, this is just a cash received from the customer. That's it. Dividend on investments. This is inflow, right? A receipt. You write it down here. Sale of store fixtures. For example, you sold ACs or water coolers, right? We call this fixtures, and that is $5,700. So how much cash you would be having? Beginning balance plus all the receipts. So in total for 2014, you would be having $69,150 as cash inflow. Now cash payments, less cash payments, all the cash payments here. Purchase of inventory, operating expenses. Operating expenses include all the expenses, utility, salaries, rent, these kind of stuff. Expansion of store, also your cash outflow. You are expanding your business, right? This is also payment. Payment of long-term debt, 5,000. Payment of dividend, 3,000. So your total payments, 65,250. Okay, how much cash you have? So this is the cash available for new financing, which means cash surplus. We call this surplus. Your inflow or greater than your outflows. How much? 3,900. Right? So budgeted cash balance needed for December 31st, 2014. So you want that your cash balance at least would be 5,000, but your cash surplus is only 3,900. How much you need new financing? 3,900 minus is 5,000 maintaining balance. So you need $1,100 more, and you can ask us as a loan, right? Up till now, it's good. The trick is here is that company want at least $5,000 every year to start with the cash balance. It means the maintaining balance is, we call this maintaining balance. In some question, we need to maintain the balance. The minimum balance is 5,000, but company's account has only 3,900. So how much more we needed?